Welcome back to the channel, traders. Whether you're brand new to Forex or have been trading for a while, but still struggling to see consistent results, today's video is going to be one of the most important ones you'll ever watch. We're talking about the 5 biggest mistakes that keep traders broke. And trust me, these are mistakes almost every trader makes at some point. The sad reality is that more than 90% of people who try Forex lose money. It's not because Forex is a scam or because the market is rigged. It's because they keep repeating the same avoidable errors over and over again. The good news, once you understand these mistakes and know how to fix them, you immediately put yourself ahead of the majority. So grab a notebook, because if you take these lessons seriously, they could literally save you thousands of dollars and years of frustration. Mistake 1, trading without a plan. Let's start with the most common mistake, trading without a plan. I want you to think of Forex trading like starting a business. No one would open a restaurant without a menu, a pricing strategy, or a plan to attract customers. Yet most traders open trades with zero structure. They buy or sell just because they feel the market will go up or down. That's not trading, that's gambling. A real trading plan should answer a few key questions before you even enter a trade. What conditions must be met before I open a position? How much of my account am I risking on this trade? Where will I place my stop loss and take profit? Under what conditions will I exit early? For example, let's say your plan is to only trade breakouts on the Euro USD when price closes above a major resistance level and volume increases. If those conditions aren't met, you don't trade, period. When you have a plan, you remove emotions from your decisions. You stop second-guessing yourself, and more importantly, you can measure and improve your strategy over time because you're following a system, not random guesses. Mistake 2, risking too much on one trade. The second mistake is one of the fastest ways to destroy your trading account: over-leveraging or risking too much on a single trade. Many beginners see trading as a get-rich-quick opportunity. They think, if I just put my whole account into this one trade and it wins, I'll double my money. But here's the reality. Even the best traders in the world lose trades, often 40 to 50% of the time. If you risk everything on one trade, one loss could mean game over. Let me give you a real example. A trader I once mentored started with a $1,000 account. On his third trade, he risked $500 because he was sure about the direction. The trade went the other way, and just like that, half of his account was gone. His confidence was shattered, and he never recovered. Professional traders treat capital like oxygen. They protect it. Most never risk more than 1 to 2% of their account on a single trade. That might sound small, but this is how they survive losing streaks. It's not about winning one big trade. It's about staying in the game long enough to let your edge work over dozens, even hundreds of trades. Mistake 3, chasing the market. Mistake number 3 is chasing trades out of fear of missing out, also known as FOMO. Here's how it usually happens. You're watching a pair like GBP USD, and suddenly it skyrockets. You panic thinking, I'm missing the move, so you jump in late. But just as you enter, the price reverses, hits your stop loss, and you're left wondering what went wrong. The problem wasn't your analysis, it was your timing. You let emotions dictate your decision. The best traders in the world do the exact opposite. They plan their trades ahead of time and wait patiently for the market to come to them. They don't care if they miss a trade, because they know another opportunity is always around the corner. A good mindset shift is this: opportunities in Forex are like buses. If you miss one, don't chase it. Another one will arrive soon. Patience is not just a skill in trading, it's a competitive advantage. Mistake 4, ignoring risk management. If I could drill one lesson into every beginner trader's mind, it would be this: risk management is more important than strategy. You could have the most profitable trading system in the world, but if you don't manage your risk, you will eventually blow your account. Risk management is about limiting how much you lose when things go wrong, because they will go wrong, and they'll go wrong often. Even legendary traders like George Soros or Paul Tudor Jones accept losses as part of the game. Here's how to do it properly. Always use a stop loss. No exceptions. Risk a small, consistent percentage per trade. Don't trade with money you can't afford to lose. Diversify your trades. Don't put all your risk into one currency pair. For example, if you have a $1,000 account, risking 2% per trade means you're risking $20. Even if you lose 10 trades in a row, you're still alive. And in Forex, staying alive long enough to catch the next winning setup is everything. Mistake 5. Trading without emotional control. This one is often the hardest to master, and yet it's the one that separates amateurs from professionals. Trading is 20% technical and 80% psychological. The market is designed to play with your emotions. It will trigger fear when you're about to win and greed when you're about to lose. Most traders don't lose because their strategy is bad. They lose because their emotions push them to break their own rules. Here's a classic scenario. You lose 3 trades in a row. Now you're angry. You decide to win it all back on the next trade by doubling your lot size. That trade also loses, and just like that, your account is gone. This is called revenge trading, and it's poison to your success. Or maybe you have a big winning trade. You feel unstoppable. You stop following your plan and take random trades out of confidence, only to give back all your profits. The solution is discipline. Treat trading like a business, not a casino. Use a trading journal to track your emotions, and if you feel emotional after a win or loss, step away from the screen. Real traders know that patience and discipline are their greatest weapons. Bonus tip: thinking short term instead of long term. I want to add one bonus mistake, and this one is subtle but deadly. Most new traders think in days or weeks. They want quick profits, but successful traders think in months and years. The power of Forex is not in doubling your account in a week. It's in compounding small gains consistently over time. If you aim for just 5% a month, that's over 80% a year. And once you master that, you can scale up your capital and truly change your financial future. Conclusion. So let's recap. The 5 major mistakes that keep traders broke are: 1. Trading without a plan. 2. Risking too much on one trade. 3. Chasing the market out of FOMO. 4. Ignoring risk management. 5. Trading without controlling emotions. And the bonus mistake? Thinking too short term. If you can fix even 2 or 3 of these, you'll already be ahead of most traders in the world. The truth is, Forex trading isn't about predicting the future. It's about managing risk, following a proven plan, and keeping your emotions in check. Remember, trading is not a race. It's a journey. Every successful trader started out making these same mistakes. What separates them from the rest is that they learned from them, adjusted, and kept moving forward. If this video helped you, make sure to like it, subscribe to the channel, and comment below with the mistake you've been struggling with the most. I read every comment, and I might even make a full video helping you overcome it.